But let's look at one other stock, which is L&T. Now, L&T's unit secured a mega contract worth $1.5 billion from Saudi oil giant Aramco. But there are some major concerns revolving around this particular order. My colleague Anushi joins in with what are these particular concerns and how will that impact L&T? Anushi.
Well, stock in focus is L&T, and this is mainly on the concerns of its order inflows from Saudi Arabia especially. Now, what is being said is Saudi Arabia budget constraints can impact L&T. How is that possible? If we look at the breakup of L&T's international revenues, they contribute to about 50% of L&T's top line. This is as of the 9-month figure that we are looking at. In fact, L&T derives about 33% of its order inflows from Middle East, which mostly includes the Saudi Arabia component that we are seeing. If you look at just Saudi Arabia's revenue contribution, this is as of the last year figure that we are looking at, that stood at about 18% as compared to 8% in 2023, and this is just expected to see an uptick higher. But again, there are a couple of concerns now that we are looking in terms of whether Saudi Arabia capex is there, and first major concern is Aramco's dividend cut impact. Now, what has happened is Saudi Arabia's oil giant, which is Aramco, has cut its dividend by 30%. So the expected dividend now stands at about $85.4 billion in 2025 as compared to $124 billion last year. This was a result of lower crude prices along with global demand affecting the net profits of the company, and thus the loss of special dividend may lead to a loss of $40 billion for Saudi Arabia government. Do note that Saudi Arabia government owns about 98% of stake in the company. Now, already Saudi Aramco has stated that its capex guidance is expected to remain muted. Now, Aramco plans about $50 to $58 billion in capital investments for 2025, which is on the muted side considering that in 2024 it had guided for a $48 to $58 billion of capital investment, in which it actually realized about $53.3 billion. So we are not seeing much of an uptake here. Along with this, an impact of crude oils is something which can also dent the Saudi Arabia capex plans. Now, Saudi Arabia fiscal deficit stood at about 2.8% in 2024, wherein the oil prices were in the range of 80.2 per barrel in 24. Now, analysts have expected that the deficit can widen up to 5% if crude falls more than 10%. Now, as far as the impact is seen in the crude oil prices, they're currently trading in the range of $70 per barrel, which is more than a 10% of a drop that we are seeing. So again, this could be something that could lead to a downtick for the company. But what does L&T have to say in the con call? Let's also see that in Q3, when they were asked about similar reasons of concerns, they said that they continue to see a good pipeline of opportunities in Saudi Arabia, and they're not seeing any kind of slowdown in segments like oil and gas, carbon capture and petrochemicals. However, during those times in Jan 25, the crude oil prices were in the range of $77 to $80 per barrel. From there on, now the crude oil prices are in the range of $70 per barrel. So there has been a downtick in crude oil prices. Along with that, Aramco's muted dividend cut that we are seeing is something that could deter the performance and deter the capex and budget constraints for Saudi Aramco, which in fact could lead to slower order inflows for something like L&T, which has a higher contribution there.
Well, thanks for that, Anushka. And with Aramco, it listed back in 5 years ago, and with around currently trading at 26 Saudi riyals, it's actually given a negative 12% return over the last 5 years. And those orders have definitely a big impact on L&T's big order book as well. But Anushi, stay with us. Let's look at some of the other key stocks to watch and trade today. What are some of the names apart from Gensol Engineering and others that you're tracking?
Well, stocks to watch and focus. First one includes Gensol Engineering, and this is after ICRA has revised its credit rating, downgrading the stock to D versus BBB minus. Now, this is based on its long-term fund-based term loans which are there. And again, this comes after the lender feedback on ongoing delays in the debt servicing that we are seeing. Do note that Gensol Engineering had already been in a 20% of a lower circuit after ratings downgraded by CareEdge, wherein CareEdge had downgraded the rating to D versus BB plus earlier. And what management has to say on this, management is saying that the rating downgraded due to the short-term liquidity mismatch. However, it denies any involvement in falsification claims. Now, second one in focus is RPP Infra, and this is after the company has received a letter of award for a 81 crore of a project for construction of integrated stormwater drain works in Chennai. Execution time period for this stands at 1 year, and if you look at the outstanding order book of the company, that stands at about 2,993 crore as of the December 24 figure that we are looking at. The last stock in focus is Galaxy Surfactant. This is after the company has entered a strategic collaboration with a global partner for EPC services, and this is for a performance surfactants and specialty ingredients plant overseas. Again, the company is also in advanced stages of discussions to enhance its collaboration post the commissioning of the plant. So these are the stocks which are in focus in trade today.